I mean, crypto in the last couple of days has just been shellacked.
Yeah.
Growth stocks have been shellacked. Biotech stocks have been just absolutely smoked.
Chamath Palihapitiya exudes the confidence that comes with being a millionaire internet investor. He owns a piece of the Golden State Warriors basketball franchise and goes about on private jets. But why did Chamath Palihapitiya sell his investments? What was he thinking and how can you benefit from all this? Hey folks, welcome back to the Chamath Palihapitiya zone. Before we move on to the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Now without further ado, let's dive in. On social media, he tosses around the idea of running for governor of California. Polyapedia, unlike traditional fund managers, thrives on controversy, portraying himself as the ultimate insider turned outsider. He helped Facebook accelerate its growth as a top executive before turning against it and publicly criticizing its strategy. Polyapedia has gone from being a Silicon Valley outcast to a financial Twitter sensation in just a few years, following the failure of his venture firm. He urges his 1.5 million followers to learn more about the biggest transactions and gamble on technology there. Critics have accused Polyapedia of using his enormous following to promote low-quality businesses. His contemporaries wonder if he is one of his generation's most astute investors or simply the most cynical. Low interest rates, breakthroughs in internet applications, and inexpensive cloud computing have fueled the emergence of massive new companies like Airbnb and Uber, and tech investors like Polyapedia have made a fortune since the financial crisis. How much of Polyapedia's performance may be attributed to the recent market's favorable conditions? He adds, probably a lot. My true long-term track record won't be known for another decade or two. Polyapedia prefers to talk about his work in terms of decades, while his critics are more interested in the here and now. According to a regulatory filing, Chamath Palihapitiya sold his entire personal ownership in Virgin Galactic and sold off 15% of his stake in SoFi Technologies Inc. The chairman of the Space Tourism Corporation sold 6.2 million shares at an average price of $35, making him about $211 million. Polyapedia and his business partner Ian Osborne still possessed 15.8 million shares through their investment company, SEH Sponsor Corp. Polyapedia stated in an emailed statement to Insider, "I sold 6 million shares for $200 million, which I want to put into a substantial investment I am making towards combating climate change. The details of this investment will be made public in the next few months. I remain as dedicated as ever to Virgin Galactic's team, mission, and prospects," the social capital founder and CEO added. Polyapedia sold 3.8 million Virgin Galactic shares in December. By merging with Polyapedia and Osborne Social Capital, Heda Sophia, a special purpose acquisition vehicle or SPAC, Virgin Group founder Richard Branson, Space Business, became public in October 2019. Polyapedia is at the forefront of the current SPAC craze, having used the vehicle to raise billion-dollar valuations for firms like Open Door and Clover Health. The stock price of Virgin Galactic more than doubled in the first 5 weeks, but has since dropped by more than half. Following the Q3 earnings cycle, he tweeted some of his thoughts on the market as a whole. Polyapedia pointed to certain markets being at all-time highs, such as software as a service or SaaS and Bitcoin, while also warning his followers about the alarming rise in inflation rates. Polyapedia informed his followers that he would be selling some of his SoFi stock to establish cash reserves in order to capitalize on certain sectors that he believes were ripe for opportunity. So why did he sell a significant amount of shares? Thankfully, we didn't have to wait long for the answer, as it was revealed in the following statement. To that end, I decided to sell 15% of our stake in SoFi to build up some cash reserves and fund several new investments. While the goal is to maximize returns on your investments, don't forget to consider the back-end costs associated with each transaction. Remove some of your positions from the table. If you've made a good profit, consider selling only a portion of your shares. You can reinvest the profits in other high-performing equities while leaving the rest alone. This allows you to spread the risk across a wider number of assets while still profiting. If your stock begins to depreciate in value, you can sell them and perhaps benefit. And that's exactly what Chamath did with his investments.
We need to be more realistic about what long-term growth looks like here.
As long as we can recycle capital and stay solvent, I think in 50 to 60 years, we'll look back and say some of these things really contributed to even the starting line, he claims. Polyapedia has a privileged position in the finance world, with virtually perpetual access to the CNBC Green Room and a sizable social media following. Is it his responsibility to not only promote his investments, but also to educate his followers on risk management? Some Twitter users claim to have invested their whole life savings in Clover, which has struggled since going public via a Polyapedia-sponsored SPAC. Polyapedia was quick to reaffirm his devotion to the company, stating that he is still a substantial investment and that he is very optimistic about his future development. But if he's pulling his money out of SoFi, despite the fact that he still believes it's a potential firm, where is he going to put his newly freed up cash? What companies does Chamath Palihapitiya back? Polyapedia mentions 4 companies in which he intends to invest these monies. Mitra Chem is a North American startup that develops iron-based cathodes for battery applications in the United States. It attempts to reclaim some influence over a sector that is currently controlled by China. Mitra Chem has the potential to be a significant winner for Polyapedia, with an increasing focus on battery technology, particularly as interest in the electric vehicle, the EV market, continues to expand. Building on the expansion of blockchain technology and the rise of Web 3.0, Spectral development infrastructure for analyzing credit risk in the evolving global internet era. Spectral is an innovation that is embracing blockchain technology to alter the way credit scores are generated, said one partner at Polyapedia's social capital firm. We believe the company is a true game changer in the credit worthiness space, and we are excited to help them continue on their amazing development trajectory. Syndica is another Web 3.0 firm that creates cloud-based infrastructure and advanced developer tools for businesses that want to interface with the Solana blockchain system. Polyapedia is very positive about blockchain technology and sees it as one of the most promising development opportunities available right now. For a man who has already invested hundreds of millions in Bitcoin, this should come as no surprise. Finally, Polyapedia stated that he will increase his existing investment in Clover Health through the company's primary offering. Clover, like Virgin Galactic, was not a startup. It had been heralded as the next great thing in healthcare for its inception, an insurer that would utilize cutting-edge technology to save costs and improve treatment. Clover, on the other hand, had squandered the hundreds of millions of dollars in venture capital it had obtained from Google, Sequoia, and other elite investors, churning through a series of leaders and consistently failing to meet growth expectations. According to a former partner, Social Capital invested $500,000 in Clover in 2015, but has since passed on investing due to the company's performance. Clover Health is a US-based provider of low-cost healthcare plans for senior persons, with the world's population aging. This decision could show to be very wise in the following 10 years.
I just want to remind people, it's really hard to live through volatility, right? And we're in the phase of it now. But typically these big drawdowns, so when stocks go down, it actually precedes, so it comes before the actual starting of a rate hike cycle.
With this, we've come to the end. What do you think about Chamath Palihapitiya's investment strategy? Do let us know in the comment section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.